Hello and welcome to another episode of Nothing Ventured with me, Arish Shah. Today, via Zoom, I had with me Elizabeth Yin. Elizabeth is co-founder and general partner at Hustle Fund, the pre-seed firm known for backing hustle over pedigree and publishing some of the best go-to playbooks for founders. Before becoming a VC, she built LaunchBit, an ad network for newsletters, which she exited to buy-sell ads. She later ran accelerator investing at 500 startups before leaving to start Hustle Fund, where she's become one of the clearer founder-first voices on how to actually raise, sell, and ship at the earliest of stages. In today's episode, we talk about why you should find 100 rabid fans.
You want to capture attention and then find those rabid fans who are attracted to that.
How there are very few moats left in the 2020s, but distribution is one of them.
So distribution is one piece of it and probably the first nut to crack.
How with product market fit, you need a product that is loved, customers you can serve at a price that works, and importantly, customers that will stick with you.
Along the lines of product market fit, I think it's this nebulous thing that no one can quite pinpoint what it is.
Why at pre-seed you don't need to worry about TAM, and why for Elizabeth and Hustle Fund, the differentiation of the idea is incredibly important.
I'm not actually thinking about what is the TAM or whatever it is other investors are trying to project out. I just, we're climbing a ladder. You just need to get on the first rung.
Why it is important to find your niche at early stage.
You want to get in a niche where it is actually not very competitive right now.
And why democratizing wealth through startups is Elizabeth's North Star.
And our mission with Hustle Fund actually is to democratize wealth through startups.
Let's get straight into it. Hi guys, whilst I've got you for a second, I thought I'd reintroduce myself. My name is Arish. I'm the host of Nothing Ventured, the podcast where I talk to the people behind the stories that make the venture ecosystem go round. I'm also the founder of Emerge One, a consultancy that provides fractional CFO support to venture-backed tech startups from seed to Series B and beyond. If you enjoy the podcast, we would really appreciate it if you could rate, like, and subscribe wherever it is that you listen. And if you want to talk to me about anything, either what we've discussed on the podcast or anything else in general, do reach out to me on LinkedIn or on Twitter or X. I'm always up for a bit of a natter. Right, let's get back into it. Elizabeth, really great to have you here via Zoom. Thank you so much for taking the time. I know it's early in the morning out there on the West Coast, but really appreciate you being here with me today.
Thank you. Thanks for having me, Arish.
Yeah, awesome. Well, look, you've said pre-seed is about speed of learning rather than polish. So if a founder has limited time, say 90 days to become kind of default investable, what are the signals that would get you from a maybe to a yes?
So the biggest risk is, do you have a product that people want to pay for? And do you have a lot of those people?
Yeah.
Very simple, but hard to do. So what are the things that you can do to start de-risking that within the first 90 days? Well, one, have lots of potential customer conversations. Like really understand the day of the life, the needs of who you think is your potential customer, and just be honest with yourself. Is this something that people would buy? Even before you even build anything, I think this is extremely helpful. And then to the extent that you can parlay those conversations into pre-sales, or, letters of intent to buy or things like that, or even, just actually people throwing money at you, those are strong signals for any investor. Even though we invest pre-traction, we like to see that founders have done their homework and really understand their customer, and what better way to do so than to do these activities.
Yeah, I mean, I think, and again, look, I mean, I follow you on X and find myself nodding along with like about 90% of what you say. No, I mean, 100% probably. That whole point around, solve the problem, not build the solution kind of thing, I think is still one of the main areas where I see very early stage founders kind of mess it up. They go out, they have an idea, they want to build a product, they get really excited. I've done it myself, and then usual thing, nothing hurts harder than getting punched in the face the first time you talk to a customer. But especially with what we're seeing both in AI and just more generally, it can be quite hard to find those customers early doors because you may be changing the way substantially that they actually do something. So how much is enough? I mean, obviously as many as possible is always great. But if you are, if you're an Airbnb or an Uber back in the day, like no one bought into, yeah, we're gonna sleep on someone's mattress in New York, and yet, right, they change the way we travel and or spend our time, right? So, how would you approach that?
Well, so this may be controversial, but in my opinion, from what I've seen with my own company and also with others, you really want to find those really 100 rabid fans who are
Hmm.
willing to throw money at you. You don't need to be selling to the whole world immediately.
Yeah.
So in the case of Airbnb, actually, they did have that from the get-go. Like in their founding story, there was a conference, and lots of people didn't want to book these expensive hotel rooms that were going for thousands per night. And so what they did was they basically said, hey, pay us whatever, some much lesser amount, and you can sleep on our couch. And they had a handful of guests who were willing to do it. And that kind of proved out, okay, there are people willing to do it. I mean, I think the question, of course, is eventually how big is this market? But in the beginning, you're not actually thinking about how big is this market. In the beginning, you're thinking about, can I get the first handful of people who absolutely love this and are going to do it again?
Yeah.
And I think actually that is way harder than most people think, because I think a lot of people in the world are just kind of meh about a lot of things. They don't love this one thing, and that's what you're going for. Can you get some people to love this?
I think, yeah, I mean, like if I think about it from my own perspective as well, like I've realized that I use a really, really small tech stack now. Like to get me to buy another product, it really has to fundamentally change the way, I do something and make me more efficient, or, save me time or make me money or whatever it is. But so if you flip that from to kind of the investor mindset, like how do you triage then what is likely, so if you're looking at Airbnb at really early stage for argument's sake, or even, when you were looking at Gamma for argument's sake, right? Like how would you go from, okay, they got a few customers to actually, but this could be, this could be an outlier?
Well, and so this is the thing, and I actually think I think about this a little bit differently than other investors, especially because I've spent a lot of my career on the entrepreneur side, which is I'm not actually thinking about what is the TAM or whatever it is other investors are trying to project out. I just, we're climbing a ladder. You just need to get on the first rung. So, and many people cannot get on the first rung. So that first rung, when I'm having the pitch conversation with the founder, the kinds of questions I'm asking are about, what kinds of conversations are you having with your customers? And then I just like really probe into that,
Got
like
it.
what people's reactions are, et cetera. Are people trying out the product? Are they continuing to come back and use it? Like things like that. What have people said about their day in a life? Why are they using this? Like I want to know everything from a founder's perspective about the day in a life of a customer. And if he or she can't tell me that, I feel like the founder hasn't done enough homework. So even though we are investing in companies pre-revenue, I really want people to start to become essentially best friends with their customers. Just as a quick anecdote, I was a few months ago, I caught up with one of our founders who had just sold her company for hundreds of millions of dollars. And she told me something really interesting. She actually had kind of pivoted into the industry she ended up building into. And so she actually didn't really know that many people, but she immediately became best friends with the customers, so much so that she was even having them over for Thanksgiving dinner in the last couple of years.
Okay.
So like that's the level of trust and connection you ideally want. I mean, most people won't get there, but that I was floored by that, because you need that closeness to get the insight and the feedback from the people you're selling to. And what better way to do that than with people who absolutely trust you and see you as a friend?
Yeah, and I guess from the operator perspective, right? Like, and maybe VC deviated from this for a couple of years, right? Revenue is the best form of finance, or profitable revenue is the best form of financing, right? So if you can show that you are close to that revenue, either because the conversation you're having with customers are leading in that direction, or because, exactly as you say, you've built the trust where you know that once that product is out in the wild, those customers are going to come and hopefully give you incredible feedback, either positive or negative, right? Because that's the
Absolutely.
best way to learn and build. So I mean, again, with your operator hat on, right, at LaunchBit you had to manufacture distribution before product was perfect, but that was back in the 2010s. But in 2026, what is the most repeatable kind of 0 to 1 channel you try first? And what are the leading signals that would suggest that you should be doubling down really quickly, or even more importantly, killing it off immediately? Because it feels like as we get into the mid 2020s, distribution is pretty much the only moat.
Yes, absolutely. There are very few moats left.
Yeah.
And even so, even these days, like there are 20,000 note takers. People switch all the time, right?
Yeah.
So distribution is one piece of it and probably the first nut to crack. But, I think unfortunately there's no one size fits all. But I think even before you find a repeatable channel, the first rung of the ladder is just I need to just get in front of a handful of people who are my potential customers and kind of whatever that takes. Maybe it's you're at a conference talking to people, or maybe it's you actually go to their offices in person, or maybe it's
Mm.
you're doing traditional cold calling, cold emailing, cold messaging on LinkedIn. Whatever it may be to get in front of that first handful of people and really just be able to get their time and mind share. And that's hard. Like let alone even selling them something like getting people's time and really getting them kind of present in your conversation and bought in, that's hard. So can you do that with a handful of people? And that can happen in 20 different ways. That's what you want to do first. Once you have those people and you feel like you're on the right track, then you can start thinking about, am I doing cold emailing? Am I doing ads? Am I doing whatever it may be, lead gen? But the first rung actually is a very hard step, and many people don't even get there.
Yeah, I think the way I think about it, I guess, is do things manually first, right, before you
Yeah.
automate, kind of thing, right? And I still remember, like, I was part of Founders Factory, which is Brent Hoban's accelerator out here in London back in 2015-16, and I remember them telling one particular business, which was kind of educational learning for kids via kind of sort of cartoons almost, right? But all digital, obviously. And the advice that whoever it was gave to them was like, go stand outside the Christmas fairs with a bunch of flyers and just hand them out, right?
Yes.
Like that is probably going to be the best way for you to figure out, is someone interested, before you even start thinking about spending dollars online, or or to your point, cold calling, et cetera, or LinkedIn reach out, or whatever it is that works these days. Because actually it's a lot easier and harder, right? But it's a lot easier to go out physically and meet someone where they are. And it's a lot harder for you to get negative feedback, in the sense that that person will either kind of walk past and say, no, not interested, or they'll actually, say, actually, yeah, I wouldn't mind taking a flyer and seeing what this is all about, right?
I mean, I think that's great. I mean, I think sometimes people try to get too fancy or sophisticated, but that works. I have a company I just invested in a couple months ago, and they're trying to get in front of homeowners. So they're in the neighborhoods. They've got flyers on light poles, and they are handing out flyers, and they're having those conversations just in the neighborhood. And it may sound old-fashioned, but it really does work, because you ultimately are trying to talk with people and have that conversation. And whatever that takes, if that's what it takes, then you can worry about scale later. But those initial conversations will shape a lot of your thinking on what the problem is and what you need to build, or if you're already building something, what you need to change to make it actually useful.
Yeah. And again, I mean, like, thinking about some of the customers that we work with, as an example, we do sort of CFO services for startups. It is incredible how, the signal can change depending on the approach you take, but also, we all talk about product market fit as if it is this, this point in time which you reach and it's a definite thing. But, some of the founders we've worked with have, thought they've been at product market fit, maybe a dozen times, or, maybe less, maybe more, before they actually get there, right? And you never actually know when you're at product market fit until it happens once and twice and thrice, right? Because product market fit, when you're seed stage trying to get to 1 million in ARR, for argument's sake, is very different from product market fit when you're a Series C trying to hit 100 million plus. So I think it's really important that whole point about start, it's not about starting small, but don't be afraid of starting small, right? And to your point, like, the scale can follow thereafter.
Yeah, I mean, along the lines of product market fit, I think it's this nebulous thing that no one can quite pinpoint what it is. But for me, it's basically the combination of hitting three things. And the first thing is, do you have a product that people love and are using? And then the second is, you know, can you get these people or serve these people to fit in a cost structure that makes sense for your business, kind of per what they're paying you? And then the third is, can you get them repeatably at this? And
Yeah.
all three of those things must be true. And the problem is you can actually go in and out of product market fit, especially with the last piece, because a channel may work for a while and then it stops working, etc. But the first rung is truly like, are you actually building something that is useful to people, that people want to pay for? And just like really focusing on that experience is the most important part before you can start to worry about these other things. Because I have backed some companies where, they were really good at growth and kind of figured out how to make the other things work. But then eventually, retention suffers, and then eventually the unit economics suffer because everyone's churning, and it's just a house of cards when it really comes back to, well, the product actually wasn't anything people wanted, but if
Yeah.
you are really good at customer acquisition, you can get anybody to buy anything.
Yeah, and I think that's a really important point about, if you think about the period sort of 2018 through to 2022, where there was just like ubiquitous capital, it was just flowing everywhere, and capital to an extent was a moat, right? You could just keep on going out and acquiring customers at pace, but no one was focused on that retention piece. And it's something that, like, every time I speak to a founder, I'm like, hey, listen, maybe focus less on the acquisition. Yeah, I get it. Like, you want to show the growth curve if you want to raise additional investment, but actually, if you focus on getting, that customer that you spent X on to acquiring them in the first place. But if you can get them to repeatably buy on a regular basis, like, it is far easier and less expensive to get a customer that you've already acquired to keep using your product than it is to keep churning and trying to buy new customers. And it feels like, again, in 2025 and as we head into 2026 as well, founders have, I guess, to an extent, woken up to that, because, again, acquisition has become really difficult because of some of the changes in paid advertising and marketing and so on, and everyone is competing for an ever increasingly smaller share of wallet, right? As more and more of these sort of products flood the market, and people are just flooded with sort of, okay, to your point, which of these 30 different, AI apps for transcribing should I be buying, right? And so what would be your advice in terms of kind of retention? Like, how should founders think about, not just acquiring a customer, but how do you keep them thereafter?
Oh my gosh. Well, that's actually, I think, the topic of the era, because this is actually a new problem, relatively speaking. Obviously, retention has always been something that startups should think about. Yeah. But I would have told you like 5 years ago that I believe that if you had a company that had grown to 10 million ARR, annual recurring revenue, and also had pretty strong retention, like very low churn rate, then I would have thought, oh, you're golden, you're off to the races. I don't actually believe that anymore, because I have seen so many new players come in and, totally eat an incumbent's lunch, or not even an incumbent, but an up and coming startup's lunch. And it's just a really dog eat dog world out there. So I don't think I have actually a great answer for how do you really ward off competition in this day and age. Obviously, continuing to hustle and run and make your product better and better is part of it. Yeah. I wouldn't consider that a moat, but that's like basically, never become complacent. That helps. I think the other is building brand that people trust. Yeah. And so that's a content thing, a marketing thing, that.
And back to distribution as well, right? Like, I mean,
yeah, again, back to distribution. But those are not slam dunks. So those are my sort of two non-answer answers. In the old days, I would have said things like, oh, workflow moat, data moat, things like that. But I think there's less and less of that, because it's actually easier to switch.
Yeah. No, I think it is. But I think the cautionary tale within all of that as well is to your point around, improving product and potentially adding features. Like, I've gotten to the point with a couple of the quite well-known productivity apps that I use, where they keep just adding more and more features, which I don't want, which actually bloats the product and makes it unusable. And then actually I'm more likely to churn and find something cleaner and more efficient and better to use. I now, and again, not to keep talking about these transcribing apps, but, I now have, I use a transcribing app, and I have the other app where I take my notes now trying to, automatically pop up, use our transcribing. And I'm like, no, I don't want this. And it's creating friction for me, which and also just annoying me, I guess is probably the reality. But that may well make me churn at some point, right?
Yeah. I mean, I think that all the companies, frankly speaking, are figuring this out. I don't think there's a great answer here. I mean, even at the highest levels, if you look at OpenAI and Anthropic, they are just head to head. They both generally do a decent job at many things, and they just are continuing to try to build to expand that presence. But I think it actually ends up becoming quite commoditized, right? Like, people have no qualms switching. Many people use both. I use both.
Yeah.
So there's just no loyalty.
Yeah, and so I think I think that is the key, right? Like, if you can build trust as a brand, if you can create that loyalty, that's where you win. I mean, in consumer, we see that all the time, right? Like, if you think about a Nike or an Apple, it isn't necessarily, in Apple's case, it isn't necessarily the quality of the tech. The quality of the tech is great, fine, right? But I was an Android user for, I don't know, like my entire life up until about a year ago, 2 years ago. And the guys in the studio here just said, "You're an idiot. Can you start using Apple devices?" I was a I was a spreadsheet junkie, so I couldn't do anything else without a Windows device. But anyway, so I switched to an Apple, an Apple laptop. And then I bought an iPad. And then just about a year ago, I was like, okay, I'm just going to have to buy the iPhone. But I bought the iPhone not because I thought the iPhone was better than the Android phone, but because my experience with the Mac and the iPad had led me to build such a high level of trust in the quality of the product that I was like, okay, it just makes sense at this point to switch rather than trying to maintain my independence as a diehard Android fan. And yeah, I mean, I think exactly to your point, it is so easy for consumers or for customers to switch these days that unless your product is doing something really delightful and not, frankly, underhand or annoying. So, I mean, recently, I think I opened up ChatGPT and there was a banner above my chat saying, we can help you with your Christmas shopping or something along those lines. And that was a real turnoff for me. I was like, oh, okay, so now, okay, this is going to be ad monetized. Okay, well, do I really need another one of those in my life? So yeah, I think it is harder. And I think it's important actually that you've said that, because I think a lot of founders, coming into the market today, potentially have this expectation that it, is similar to 2018 and all the stories they hear from exited founders, et cetera, that, okay, you can just build by doing these three things, or, this formulaic approach to building. But actually, it's a completely different environment. Like, even from a marketing perspective, how do you get, your name and your company's brand onto these LLMs, right? So that you are being referenced when people do searches on LLMs rather than just on Google, right? Like, there's all sorts of new complexities being built in.
Absolutely. And you briefly mentioned hardware, and a lot of VCs and founders are thinking that hardware is a moat. But I would actually argue, unless you can build out a whole ecosystem that people are locked into, like Apple, which takes years, I actually am not quite sure that is a moat either. I'll give you an example. Like, I think I read in the news recently that iRobot that makes the Roomba went bankrupt or declared bankruptcy. Okay. And it's just like, they are an iconic brand, but the reality is there have been so many smart vacuum cleaners that have come about in the market in the last, call it, decade or two. At CES this year, there was a competitor, a cleaning robot that actually goes around and picks up your socks. And so, you have to keep up with like all these kinds of features. I don't think the Roomba can do that. And maybe that was their problem, but it's just like, even with hardware, it's not a slam dunk. Just because you have the device, that is not stopping people from running out and buying the next version of somebody else's cleaning robot.
Yeah. On top of which, Asia, China very specifically is able to copy or innovate. And I think this is the one thing that I have a real bugbear about is, in the West, we think that China is trying to keep up. I mean, I think they are leaps and bounds
They're
ahead
way
in,
ahead.
in so many areas, right? And we're kind of
Yeah.
sleepwalking into that reality because, I still remember getting off the plane in Shanghai like a decade ago, walking out to get my taxi, and you've got this like 8-lane superhighway or whatever it was. And it was just incredible. And I was visiting manufacturing sites for equipment that I was buying, and it was just it was it is not the story that I guess is sold in the West. Like when you go to China and see what is happening, or if you even go to like the Guangzhou fair or whatever, it blows your mind, the kind of stuff that is coming out.
They are so far ahead. Yeah. And especially on hardware.
Yeah.
So that's the other thing, right? Even if you have a first mover advantage, you have an amazing product, just know that somebody is nipping on your heels if it's a good business, because people want to come in and just eat your lunch.
Yeah. So sorry, guys, there are no moats. I guess is the upshot of that. But look, this question is one that I think gets to the heart of why I've loved following you on X. Previously Twitter, but also why, a lot of time for the whole Hustle Fund team, because, you guys put out some incredible advice and really kind of from that founder perspective, which I think is incredibly important, especially here in Europe where, and the stats are something like in the US, you have about 60+% of VCs being ex-founders, ex-operators, whereas in UK, Europe, it's about 6%, right? So we just have that imbalance in that investor operator kind of background. So founders get a huge amount of bad advice from people who haven't ever run a startup, right? And we see this on Twitter all the time. What are the two most common kind of VC-isms that you see hurt founders right now, and how would you rewrite them from an operator's perspective?
Oh gosh. Well, the big one that bugs me actually comes back to this concept of your TAM or your market. Your TAM or your market, like that it just is so far away for a pre-seed founder who needs to focus on getting the first 5 customers. And I feel like when VCs try to think about, oh, what is the TAM of this or whatever, frankly speaking, almost every business I've invested in, including all the ones that have done super well, they are not doing what they set out to. Like Gamma is an example of that. They are doing something a bit different than what they set out to do. So, in fact, actually, just fun thing about what they set out to do, like, and this may sound a little silly in hindsight, but essentially they were trying to make it easier to, pull in your data, like from your spreadsheets, et cetera, into slides, rather than kind of the version, which still involves slides, in generating slides automatically with AI. Slightly different. So the thing is, like, it is really hard, I think, to quote calculate TAM. Airbnb and Uber are great examples of that.
Or
like their actual
Netflix,
markets,
where they were like shipping you a DVD in the mail, right? Yeah.
Like often the markets may be adjacent to what VCs think they are. So that's a big one. And I think as a result, actually, when investors give that feedback to founders, what founders do is they say, oh, well, my product can broadly apply to everyone, which obviously is not right, because even if it can in the long run, what you need are those first handful of rabid fans. And that often happens when you're niche and focus on a specific customer persona with a specific problem. Like that's the best way to get rabid fans, but it feels niche to an investor.
Yeah.
So that's sort of the challenge of that.
Yeah. So it's almost like, in order to really prove that the product has value, you've got to go after a tiny market, which is anathema to an investor, because they're like, no, but I want to see a massive, massive, massive market, right? I also think, I mean, like, as someone who, again, spreadsheet jockey, and when I work with founders and they're like, okay, let's do a top-down kind of approach, and we want to build out our deck to show our TAM, our TAM, our SAM, our SOM, etc. And I'm like, okay, but it always ends up as, if we only capture 0.5% of the market, we're going to be worth X, Y, Z. I'm like, but that's just crazy, because what is this market? Like, how have you calculated whether or not you can address this market? Like, you're just picking numbers, and you can't. And this is the point, right? At pre-seed, you can pretty much pick the numbers that you want to for those purposes, right? And present whatever you want. So again, it's kind of a useless metric to be chasing. So, I mean, going back to your earlier point around, for you want to see that early customer traction or user traction to really show that, that there are people that love and potentially will pay and buy the product that you are building or selling. So when you're looking at a deck, right? So before you've had your meeting with the founder and the pitch, if you're looking at just the deck, what do you therefore focus on? Presumably like product, team, and traction. Is that essentially it?
Well, so before we even get there, I actually think the differentiation of the idea matters.
Okay.
So, and this actually does tie in a bit with whether you're niche or not. If you are presenting something that's very general, that actually is fraught with tons of competition.
Yeah.
And then it's really hard to stand out. But if you're very focused, in general, it's a lot easier to get that particular customer persona. And I think it's also easier to stand out amongst investors, or at least with us.
Yeah.
So what am I looking for in differentiation, and why does that matter? I mean, I think the problem in general with competition, just from a market perspective, is one, competition drives up customer acquisition costs.
Yep.
Like if you have tons of competitors, it's more expensive in ads, more expensive in mind share, just more expensive in general. And then number two, if you are in a crowded market, that almost means definitionally as well that every investor has a horse in the race. Like everybody has invested in a different company that's doing this. And so people are conflicted out. So it's actually harder to raise money. So combined, that's actually not a good combination because you need more money for the customer acquisition costs, but you can't get access to more capital. So as a small fund, we generally don't like that dynamic.
Yeah.
So the idea matters a lot, and your approach, even if this will end up being competitive, every idea ends up becoming competitive. You want to get in a niche where it is actually not very competitive right now, really solidify that, and then expand out. So like actually, if we go back to Airbnb as an example, their very first idea was extremely niche in that they were selling spots on couches, right?
Yeah.
In apartments where the host was there. I think nowadays, if I had to guess, I would guess most of their rentals, that is not the case.
Yeah,
I would imagine
standalone apartments or houses or whatever.
Yeah, they're renting the whole place, whatever. It's actually much more competitive to HomeAway or VRBO or any of those that actually have been around for a long time, even prior to Airbnb, right? So they eventually enter, or even the hotel market, I would say is competitive to them. So they're in a much more competitive market, and they can do that now that they're a large company. But when you're starting out and you're saying, hey, the value proposition is you're going to a conference and you don't want to pay thousands of dollars for a hotel room, sleep on my couch and pay $100 for that. Like that's very specific and different.
Yeah.
So much so that I think people were like, oh, that's weird, but definitely stands out. You want to stand out. And you want to capture attention and then find those rabid fans who are attracted to that. And so that's kind of the thing I'm looking for in the pitch. It's good. Like an ideal pitch actually sounds a little bit weird to me.
Yeah.
I have to use a bit of imagination of like, okay, if they can solidify this market, what are sort of the adjacent things that they can move into that's much more crowded? But if you get a strong foothold, then you can enter the crowded market. But you cannot start out going into the broad mass market. Like it's just too much capital required, too competitive, hard to get mind share when you're a nobody. You got to work your way into that more competitive market.
Yeah, and there's a couple of kind of points that come out of that. Firstly, to your point, right? If you have no competition, you're probably not building something valuable, right? Because ultimately competitors come to where they see that they can capture some value, right? And it may be adjacent, it may be in a separate sort of niche within that niche or whatever, but like if you're not seeing competition, there's probably something wrong. And the second thing that kind of came out, what you were saying, and again, I see this a lot with especially very early stage founders, when you talk about that generalist approach, what I often see is founders trying to attack 30 different revenue streams at once, right? Like, so again, rather than niching down into that one product, one market, one kind of revenue stream, they're like, oh, we're here, we can also sell them, XYZ, or we could, build a SaaS product that services them in this way. And again, it fragments attention and it stops them from, to use your words, finding those rabid fans, because you're actually then confusing them with the product offering, right? You got just too much going on.
Yeah. Well, and I think just the reality is, when I'm seeing companies is generally two people in a garage.
Yeah.
There's only so much you can do as two people in a garage. I
Mm.
think once you get to be a bit, not even that large, like if you get to be above 20 or 30 people, then there's a lot more you can do and you can withstand competition. But you have to kind of take on challenges that make sense for where you are in your business. And I think I liken this issue to, if you want to swim in the ocean, you don't just jump into the middle of the ocean. You want to first start in a cove
Mm.
and really knock it out of the park in the cove before you venture out and you're ready. So I think this is sort of the challenge in pitching, but also in running your business. Like the approach on it matters so much.
Yeah, look, 100%. I think, Elizabeth, we could probably carry on talking about lots of this for a long while, but I know you have a very busy day ahead of you. I've got a couple of kind of questions that I ask all my guests, and I'd love to get your responses on these. So, what is one thing that you have a contrarian conviction about from any area of life, whether that's work, politics, socially, or at home?
It's probably not super contrarian, but I actually take very few meetings.
As I found out.
I take very few meetings because I think it's important to do deep work.
Yeah.
It's more efficient if you're not meeting. So I actually do a lot of I guess things that would be in meetings async.
Yeah.
Which I think is actually a little bit off-putting to some people as well, but it is it's my style.
Yeah, I'm sadly the opposite, but reluctantly so, right? Like I have to take a bunch of meetings, but I'd much rather be doing the deep work. And I guess Jeff Bezos had that whole thing where, it's the whatever it was, 3 pizza rule, but on top of that, like before you get into a meeting, have a doc. Everyone goes through that doc. Everyone spends actually 10 minutes at the beginning of the meeting to get through the doc so that, everyone's on the same page. So you can be as efficient as possible, which means doing the deep work beforehand rather than trying to do it in the meeting.
Yeah, yeah.
I think it is a skill, one that I'm yet to master for sure. And finally, look, so that we can get to know the real you, what is something that moves you emotionally?
Well, it's funny. A lot of people ask me, why do you want to become a VC? And I think the reality is actually, I don't even see myself like that. I wanted to start Hustle Fund.
Mm.
And our mission with Hustle Fund actually is to democratize wealth through startups. So VC is a component of it. Certainly investing in startups and helping startups grow in that way is a big component. That is the core business and how we make money. But for us, like we want to make startups accessible in that literally anybody around the world can build a startup today. But I think that knowledge capital networks are still not distributed equally. And so we're trying to push those 3 things with Hustle Fund to basically, I guess, evangelize, you could say, the idea of entrepreneurship. And so that's something that's very near and dear to my heart, because I think, especially with a lot of change in the world with AI or just in general, there's no safety in jobs. Who knows even what's happening in education? People have to be nimble. They probably have to be more entrepreneurial, and even many people will probably have to start businesses in the next 20 years or so. And so they need to be well prepared, and we want to help more people globally with that. So that's a mission that I care a lot about, and why we're doing Hustle Fund.
I think that's awesome. And couldn't agree more with, I have a 24-year-old and an 18-year-old, and like my message to them is, be generalist, learn how to use the tools. You don't know what's going to be happening in 5 years. You've got to be able to adapt and move, because who knows what's coming down the line. Elizabeth, it's been absolutely phenomenal having you. I'm so glad we were able to do this. For the audience, where can they find you online? You on Twitter? I know you are on X, or LinkedIn. Where's the best place for them to find you though?
Yeah, Twitter, my handle is DunkHippo33.
It really is, yeah.
Like slam dunk, like the basketball. And or if you are interested in checking out Hustle Fund, our website is hustlefund.vc. We do take pitches on the website. If you are building a software business, we would love to hear from folks.
Yeah, and I highly recommend you check out Hustle Fund, the Hustle Fund website if you haven't already. I mean, the resources on there are absolutely incredible. There is a hell of a lot you can learn as an early stage founder and as an angel investor and much, much more. Elizabeth, thank you so much for joining me. It's been an absolute pleasure having you here with me today.
Likewise. Thank you, Arish. Appreciate you.